You are about to find out the key levels for NIO. So to get straight into it, firstly, I want to cover the levels that we're looking at, the key levels that we're going to go through. They act like the following. So the first time we hit our first deviation on the 1 year, you came into it, you sell off. You came into the second deviation from the 6 month, you sold off the first time, you're starting to get another sell off now. So again, these are how you expect the levels to act. They don't always get it pinpoint accurate, but that's why, at least from how I trade, I tend to trade defined risk options. So really, I don't have to time it perfectly. I don't have to get stopped out when I know 9 times out of 10 the overall move is going to be correct. So again, these are the normal reactions you get at these levels. So what are going to be the following levels? So the next move, right now we're at 1075. Really want to see that next push to the upside, and 1260 is going to be my next short bias location. Now, again, this can be a target if you're long bias, but from how I trade as a reversal trader, that's going to be my entry. That's where I'm going to look at it short bias, and what's going to be my target. My first target will be whatever the closest deviation is, which is going to be around that $11 level. If we do break that though, then we have our next target at $14.50. And again, if we break it one more time, we have our final resistance level at $18.80. So again, depending on the way you trade, you may use these levels a bit differently. If you're a trend trader, using these as your targets could work out. Me as a reversal trader, I'm looking to basically just play against the trend as you come into these levels. Normally, as you come into these levels, you will tend to see profit taking. So at least you get a pullback, and that's where we look to take our profit, or take some profits, move our stops to break even. And in the other chance where it's an overall reversal, then again, those are going to be those home run trades. But again, we can never guarantee those home run trades. So we take in profits on the pullbacks, just to protect us in case it continues. Like in this case, we pulled back about $1.50 on this one, pulled back about $1.50, or about $1 actually on that one. So we can make money on these pullbacks, and then if it does continue up again, we're not then going to lose money. So that's how I'm looking at it. Again, the next key resistance is 1206, 1450, and 1880. And again, if you're shorting, for example, the 1880, you just use the next deviations as targets, or at least that's what I do. 1450 if I'm shorting the 1450, or again, might be shorting the 1880 and want that next target. 1260 would be the next target. And again, that's how I would be looking at them. Again, as you start becoming from this third deviation or above, that is extremely overbought. You never tend to really hold above that level. Again, if you understand standard deviations, you know that 99.7% of data should trade within its third deviation. So what this tells us is, from a 6-month chart, only 0.3 or 0.03% of data should trade outside of here. So again, very small amount. And that's why I like playing the reversals at this level. Again, nothing in the stock market is going to be, 99.7% accurate, but it just gives you a good signal that as we come into that level, again, that's where I'm going to be short bias. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.